If it feels like filling up your tank suddenly got a lot more expensive, you're not imagining it. Gas prices moved up fast, and when that happens, most people want to know one thing. What changed? The answer is, it's not just one thing. This jump is coming from a mix of normal seasonal changes, stronger spring demand, and new pressure in the oil market tied to conflict in the Middle East. So in this video, I want to break down what's actually happening, why it matters, and what drivers should watch next. Gas prices do not always move slowly. Sometimes they rise a few cents at a time, and sometimes they jump because several factors hit at once. That's what this feels like right now. People notice gas prices more than most other prices because it is immediate. You pull up to the pump, you see the number, and you feel it right away. And when prices move fast, it usually means something changed in oil markets, refining, supply expectations, or consumer demand. Right now, it looks like all of those pressures are contributing at the same time. The first reason is the most boring one, but it matters every year: seasonality. As we move into spring and summer, gas prices often start rising. Part of that is simple demand. More people are driving, road travel starts picking up, and fuel consumption increases. But there's also another piece people do not always hear about. Refiners begin shifting to summer blend gasoline. Summer blend fuel is designed to reduce evaporation in warmer weather, but it usually costs more to produce and distribute than winter blend fuel. So even without any major global crisis, that seasonal switch alone can start putting upward pressure on prices. The second reason is crude oil. Crude oil is the biggest underlying cost behind gasoline. So when oil prices rise, gas prices usually follow. Now, gas prices do not move in perfect lockstep every single day. But over time, higher crude tends to mean higher prices at the pump. That is why every gas price story eventually comes back to oil. If traders believe supply could tighten, shipping could be disrupted, or production could be affected, crude prices can move quickly. That brings us to the third reason: geopolitical risk. Gas prices are also reacting to the conflict involving the US, Iran, and Israel. And the reason this matters is not just the headlines themselves. The bigger issue is what the market fears could happen next. When conflict raises the risk of disrupted oil production or tanker traffic, oil traders react fast. One of the biggest concerns is the Strait of Hormuz, which is one of the most important shipping routes in the global energy market. If markets think oil shipments through that area could be threatened, even temporarily crude prices can jump on fear alone. And once that fear gets priced into oil, consumers start seeing it at the pump. So this is the key point. Gas prices are not rising simply because of politics or because of one event in isolation. They are rising because markets are reacting to supply risk. What makes this especially frustrating is that these factors can stack on top of each other. You already have the normal spring transition. You already have stronger demand. And then you add geopolitical tension and oil supply concerns. That is when price increases can start to feel sharp instead of gradual. And for regular drivers, the economics do not matter as much as the reality. Commuting costs more. Work travel costs more. Weekend trips cost more. And every fill-up starts to feel like a reminder that energy prices affect everything. So what should people expect from here? The honest answer is, nobody can predict the exact short-term path with confidence. If oil stays elevated and supply concerns continue, gas prices could remain under pressure. If tensions ease, refinery output improves, or markets calm down, prices could stabilize or pull back. But the main thing to watch is whether this stays a temporary spike or turns into a longer stretch of elevated prices. And that will depend mostly on three things: oil prices, refinery conditions, and whether conflict risk gets worse or starts cooling off. The bottom line is this: gas prices jumped because several forces are all pushing in the same direction at once. You have the normal seasonal shift into more expensive summer fuel. You have stronger spring driving demand. And you have conflict-driven fear in the oil market, especially around global supply routes. So if filling up feels a lot more painful right now, that is the reason. This is not just random. It is not just one headline, and it is not just one cause. It is a mix of seasonal pressure and global oil market risk, and drivers are seeing the result in real time. If this kind of breakdown was useful, like and subscribe, and leave a comment of what you would like to see next.